What is up, guys? Hello, my boot camp. So we're gonna do a little bit of review from today. This trade we took this morning, right? So we have this accumulation, right? Manipulated higher, back lower, and then distribution to this 15-minute and the breaker from the weekly outlook video. Okay, so let me do this. We reversed from there over in the opening. Displacement never came back up this breaker, left it there. This high, low, higher, high right through it. Dropped lower into this cluster in here. Look how we reversed off of this 18,900. Bounced, came up, used as support, and now we're retracing back higher. But what I want to point to you is this original consolidation here, right? We have this whole range here. Consolidation. Right? If we pull this over, notice how we're just inside of this consolidation, right? We never break this low. Breakout, pullback, 50% or consequent encroachment of the consolidation, right? Usually in a buy side of the curve, in the buy model, you'll have a break and a retest kind of thing. But if we take our standard deviations from the low of the consolidation and we project up to the high of the consolidation, so this low to this high, we get 1 to 1.5 little reaccumulation in here, 2 to 2.5 in here, and you see 2.5 standard deviations here. Is black. Right where we reverse from. Okay. We can also look and see if we had SMT. Let's see here. So notice this high is taken 12:45 p.m. So 12:45 p.m. candle is taken there. $12.50 candle. $12.50 candle right in here. So slight SMT there. This 1250 candle is swept and this 1250 candle is not. Right, so we trade lower here. So SMT with ES. I'll put it on the top. Okay. So 2.5 standard deviations plus SMT. There's a breaker formation here. So what can we do? Well, we measure from the breaker high down to the low. Okay, so measuring from down, 1 to 1.5 silver bullet area. we get this bearish gap. -2 to 2.5. We bounce, reaccumulate up, back up into 1 and 1.5, and then distribute lower. Small little volume imbalance. And then we tap into the -3 to 3.5. Right, so -3 to -4. Overextended. Taps back to the original consolidation and does not finish the sell side of the curve. Why? Okay, so this is our market maker model, right? Original consolidation here. You get, I guess, kind of a accumulation, reaccumulation, and then you get distribution. Okay. Now, why does price not finish the market maker model and take sell side here and here? If we were to measure this range from the original consolidation low to the smart money reversal, okay, notice at equilibrium here, 50% of this range from this consolidation low to the SMT high here, smart money reversal, we do not displace through 50% here. We bounce just underneath it and retrace, and then we get some doji candles that go through there. If we were to get heavy displacement through this 2 to 2.5, then we could likely see at least 4 taken, or 5 being the standard deviations to take the rest of this market maker sell model. Now, we could potentially be coming back up into here, right? To then redistribute lower. So we could finish this model later on, but then we have a tinier market maker model within this price action now, right? And everything repeats. Here, here, point of interest. I think this is a 15-minute as well. Okay. A little consolidation area. Break, retest, 50% of the range, back up. So what can we do here? Take our Fibonacci, measure the consolidation, up, 1 to 1.5, reaccumulation, 2 to 2.5, reaccumulation, then here. So then we're looking at this next range in here inside this 15. We could go higher, wick through, price into this breaker, right? So, and we're heading into London, which not the ideal time of interest for trading. So the AM session for indices and futures is much, much better. But for all intents and purposes, for studying and practicing projection theory, right? Measuring these ranges, original consolidation, different stages of the buy side and the sell side of the curve, we can see how everything just kind of repeats up and down, right? So we went over this projection, 2 to 2.5, where we reversed from. SMT was here, right? And the trade we took this morning, there was SMT, or was it in here, right? So SMT, right? We discussed how and when and why a market maker sell model does not finish the entire model. Well, the range, does it distribute with displacement through equilibrium? And then we went over potential for the next market maker model. Okay. So I'll leave you guys with that, and I'll see you guys until next time.